What's up everybody, hope you're all doing great. Welcome back to another video of Cilinix Crypto and another video for the trading education channel on Discord. So if you're here from YouTube, you're very welcome, but if you want to know more about this, what it is, and more videos from this series, check out the Discord link down in the description. This is basically one part of the education I have been putting out over the last week. I've started over the last week, but I will definitely continue doing it over the long run. So if that's something you're interested in, check out the Discord. It's one of the categories and channels there. So what we're going to do in this video is we're going to check out EMAs, which is an indicator which you can use in trading. MA is moving average, so it's the average price over a specific period, which you can change yourself. And then EMA means exponential moving average. So it's not a normal moving average, so it's not the average of prices. No, it weighs more towards the latest periods. So that there's some sort of a recency within the moving average that the last candles or the latest prices weigh a little bit more than the prices a little bit more in the past. So let us see what you can do right here. You can just look it up with the indicators, look up moving average exponential, and you can find it. Here you can find the length, so 28, that means the average price exponentially weighing more towards the latest candle of the last 28 candles, and which price, the price it had when it closed. And here you can just check the style. That doesn't matter that much, but that's the main thing. In my trading style, which if you want to know more about my strategy and one of my trading styles, you can find that on the Discord too, in the channel category under trading education if you want to. I use 4 moving averages, 4 exponential moving averages, with periods 28, that's blue, 50, that's red, silver is 100 EMA, 100 periods, and the 200 is the 200 period EMA. That you can use them on the 4-hour time frame, you can use them on the daily, you can use them on the weekly, doesn't matter. Why do I use 4? Well, basically every EMA tells you a different story. The 200 EMA is the most reliable one, and it shows you the overall strength over a longer period of time. The 28 EMA is a little bit more reactive. If that goes up, that means that we're in some sort of an uptrend, but it's only a sustained uptrend if we actually hold multiple EMAs. Where if you can see that the golden EMA is going up, you can definitely tell that we're in a sustained uptrend until we break that. And then basically the same thing applies when we're going down again. So every EMA, basically it's from strongest to least strong, but all are useful. The main reasons why you would want to use these EMAs is for 2 things. First of all, they can show you the trend. So when EMAs are moving sideways, like this, price is usually consolidating, which is also visible right here. Here it's still kind of sideways, right? And it's still a consolidation, just a little bit bigger. And if EMAs are all coming down like this, you can see EMAs are going down. That means that we're in a downtrend. And what usually people say is that when the EMAs are on top of the candlesticks, we're in a downtrend. And if they're below it, we're in an uptrend. But you can also just see it with the EMAs, usually the price follows that. It is a lagging indicator though, so the price will first trend upwards and then you will see the EMAs. But still, overall, you could spot the general market structure over time with them, which is a very underrated and valuable part of trading. Apart from that, and the reason why I use them the most is because they also serve as support and resistance. And in that, they're not so lagging. And the same applies, as I said. The 28, the blue one, is the least strong one, but it's still usable and valuable too. And the 200 EMA is the strongest one. As you can see, it can both serve as a resistance, as you can see right here. And you can see that it's pretty strong, right? I mean, the 28 EMA sometimes holds 2, the 50 EMA holds sometimes, the 100 EMA holds a little bit more, but the 200 EMA holds a lot. And here you can see it also serves as a support. And you gotta know that when the EMAs are moving sideways, So in a consolidation, they are less effective. They can still be effective, but when the market is trending up or trending down, they are stronger. As you can see, this is a downtrend, strong 200 EMA touch right here, strong 100 EMA touch right there, 50 EMA touch right there, pretty strong. And overall, you can just see that that 50 EMA is pretty strong. So those are the main two ways to actually use the EMA. If you want to put one on your chart, as I said, you look up EMA right here. It's this one, the moving average exponential, which you can change by clicking on the settings. The only thing you really need to change is the length and probably the style, and then you can use them for yourself. As I said, by spotting the market structure, is it trending upwards, downwards, is it consolidating, but you can also use it for entries to long and short trades depending on the trend and depending on where the EMAs are. So that was basically this video about exponential moving averages, or EMAs, in crypto trading. If you still have any questions left, please let me know down in the comments. You can also ask them in the Discord if you want to. But for now, thank you all for watching and listening, and I hope to see you all in my next videos. Bye.